Well, it's been a bit of a lukewarm year for the restaurant stocks. Check out names like Dine and Bloomin' Brands, owners of popular chains like IHOP and Outback Steakhouse. Both stocks are up double digits, but still trailing the broader market. Same goes for Darden, which is barely in the green, while Brinker Brands, owner of Chili's, or Chili's, as my mom likes to say when she's fancy, is down more than 3%. Our next guest is no stranger to the food space. Zane Tankel is the CEO of Apple Metro, which operates several Applebee's chains in the New York area. Welcome, Zane. Thanks for being here with us.
Thanks for having me.
We've been talking a lot about the consumer and the strength therein, really supportive of this broader economy when some of the other macroeconomic factors have faltered a little or maybe stable at best. What do you think about the state of the consumer going into 2020? Still strong? Flashing any warning signs?
No, not really warning signs. Still strong, still spending. The problem in our space, the restaurant industry, all segments of it, what we call fast food or quick service, fast casual, and we're casual dining, table service, is it's in a transformative stage. Doesn't know what it's going to be when it comes out of 2020. It's got some indicators. We've got to-go delivery, Uber Eats, Grubhub, all these models to deliver. We have all sorts of to-go items. We're a technology business. McDonald's, as you all know, bought 2 tech companies this past year, spent some hundreds of millions of dollars doing it. They're in the food business. What are they doing buying tech companies? Because it's all about making it easier for the consumer to buy. So iPhones, you'll be able to order from a menu. We have a app that's called I'm Here. So when you come, when you order before you get there, it'll track you when you sit at a table, and you push I'm Here, and we'll deliver the food. It's all about trying to compete for the consumer's time. The good news versus I listened to your earlier block about technology and all these wonderful things, they still have to eat. So we don't have to worry about whether they'll eat. We have to worry about how they'll eat. And we have to worry about attracting them to us.
What about running the business as wages increase and you're asking your staff to now work with orders on the I'm Here app, as well as sort of balancing all of those drinks at the same time?
You got to navigate it. We saw, for example, here in New York City, 3 years ago, they announced $15. This past year, I sat here, and it was the start of $15 minimum wage. Now people are rattling about $20. So here's the difference. And why I think the economy keeps chugging right along is the technology piece, making us more productive, doing more with less. So when I started in this business, we thought 3 table stations for a server is the way you give good service. Maybe if they were super, you gave them 4 tables. Today, they have 10 tables. And why do they have 10 tables? Because they have a tablet that they take your order, push send, it goes into the kitchen, they go to the next table, and we have runners from the kitchen that just bring the food back to the table. And we're in a transformative stage. We've got to reinvent ourselves. The big challenge, as I see it, is getting people off the couch and getting them out to come in. Now, we can handle that through the third party and to-go, but we got these big boxes.
So what about the third party and to-go, though? Where does that? I get the efficiencies, how you head off some headwinds with technology, but it seems like it's a race to zero with all these food delivery companies. I get the benefit for you, but can they survive? What does that look like 2 years,
Steve,
5 years?
That's a question I ask myself, because it all started off about a year ago at some very high prices. I can't share with you what the prices are today, in all fairness, but it slowly morphed down. And I'm not sure what the model says as to how it's coming down, and it's coming down. You're absolutely correct. I can only believe they're trying to compile these billions of people, and they'll be able to sell that advertising, because these are very, like cable TV, very specific channels. They stay home, they order, they eat a steak, they will know everything about anybody. The Russians are spying on our infrastructure for arms race. We're spying, or they're spying on everybody about what's the consumer's habit. How are they going to eat? Because here's the good news, and I tell our people this all the time. We get in the habit of eating when we're born, and you never break it. You never break it.
Zane, so you're an amazing businessman. People should Google your name and see what you've done over the last 40 years. It's remarkable. And we've known each other a long time. So your costs keep going up. You mentioned it earlier. How sensitive, dollars and cents wise, is your clientele to a menu item changing in terms of, is it 5 cents? Is it 50 cents? My sense is it's less than people think.
Exactly. Guy, that's a great question. In fact, I've never been asked that question. It's a nickel. A nickel price increase, we get phone calls. I read, we do about 200,000 meals a week. I read every single complaint that comes in every single day. Now that sounds
about
like
those. I apologize.
It's well, I was going to talk to you about that off air, but the reality is it's not that many. It's 30, 40, 50, maybe 200,000 meals a week. But here's the one we get: if we raise prices by a nickel, lots of pushback. Lots of very, very sensitive consumers say, "Oh, I could go down the street and eat it for $6.25, and you're charging us $6.35."
Also, 10 tables, that's asking a server an awful lot. I should probably disclose I worked at 2 different Applebee's in Dayton, Ohio. I don't mean to brag, but I was not a good server. But I understand that you have a busy night here tonight. What are you offering the revelers in Times Square?
Yeah, okay, well, thank you for asking, as a matter of fact, Courtney. We for $500, we have a VIP. You sit at the window, you look down and see the million people, as you guys do, for free. In fact, I was asked on air yesterday, they said, well, for $400, what does that get us? And I said, $400, it might get you into Times Square. It certainly doesn't get you in our restaurant, but you might get into Times Square. It's $500 for a VIP. It's $400 for regular seating. We lock the door. We have entertainment. We have prime rib. We have all you can eat, all you can drink. And here's the irony. Guys are talking about the market and where it's coming from. Nobody's from New York. Nobody's from the United States. They're coming from Chile, Argentina, Mexico, all over Western Europe. Their English will be the second most common language you'll hear in either of our restaurants tonight.
Well, I hope it's a wild success. Thank you for joining us.
Thank you so much.
Zane Tankel
Thank
here
you,
on
Courtney.
New Year's Eve.
I appreciate it.
All right, guys, what do we think? Guy, I'm going to start with you. When you're looking at restaurant stocks, you're looking at the strength of the consumer. Any names you want to play? Some underperformance?
Yeah, I'll play. I mean, McDonald's has
2019.
been a monster. It's a technology play now, but valuation's probably getting a little stretched. I tell you, one that I was wrong on for a long time, but we finally have gotten it right, is CMG. I mean, you look at that stock and say, you know what, valuation doesn't make sense, but their organic growth is tremendous, and they've turned into a bit of a tech company as well. So all the names out there, the one that still has upside is CMG, Courtney.
Up 94% this year. Dan, what do you think?
You know, I want Karen's opinion on McDonald's. You just mentioned it. That thing is stalled out. It's only up 11% on the year, but importantly, it's down 10% from the all-time highs, trading 24 times. That's actually been reasonable for this multiple if you expect growth. I know you've owned it.
I have in a long time. I got out of that way too early. I mean, I love the franchise. I love what they're doing. I think they've been ahead of the game. And I think that I've seen the power of digital, and I think that it'll continue to work for them. I know it's, you know, as you said, down for, you know, the last couple of months haven't been good, but I think they're really an incredible franchise. 24 isn't crazy to me. I think they can grow earnings.